Hey, this is Justin with DayTradeTheMarkets.com on Wednesday, April 3rd, and we had a pretty nice sell-off in the emini S&P today, so I wanted to look at that market and kind of break down the sell-off and look at some of the clues that it was happening and some of the clues that we were getting into more of a consolidation toward the end of the day. What happened heading into the day, obviously we're leaning bigger picture to the upside, but one of the first kind of minor clues was that we couldn't make new highs above the 68 level from yesterday, and kind of topped out overnight and then right at the beginning of the session and decelerated here around the 66 area. And then you can see we like to look for what we call our first major structure, and in this case it was what we call a high velocity box there, made by sellers on the low of the day. And so when one of those comes in, we want to make sure, or we like to check to, can the high of that selling structure, can it stay intact, or does something else happen more in the future that changes it? But until that happens, we'd have to say that short term you wouldn't want to fight the sellers in this environment. So number one, avoid the long side until you can see more buying evidence coming into the market, and it can give you a little bit more confidence on any kind of a short trade. Now with that said, it's what we also call a conflict situation, because the shorter term structure at this, early on in the day and as it developed throughout the day was more bearish, whereas our bigger picture was more bullish. So it's a conflict situation where you have to kind of ask yourself, if you're more of a shorter term structure, then you're going to put 75-80% of your decision making on what's going on short term with the intraday structure, whereas if you're more of a bigger picture thinker, then you're going to want to wait until the conflict is over and some buying comes back into the market. So hopefully that makes sense. But just kind of weighing bigger picture versus shorter term. But what I want to do now is more break down the shorter term structure. So again, beginning of a selling wave there, and until that's taken out or until something else changes, you don't want to fight that. Now we test into support and bounce a couple points, and you would think if the buyers are a little bit strong, they should at least test this potential resistance area. That doesn't happen, but then we have another bit of conflict. It was a little confusing at this point because there was some conflicting evidence with this level 3 selling bar testing the lows that didn't have follow through. So typically what's going to happen is if you have a level 3 selling bar on the low of the day, especially in a bigger picture up market, 7 or 8 out of 10 times that's going to signify the low of the day is in place. Now that didn't happen today, and you can see again we didn't go and test the high of this resistance area, and you can see then we tested shortly thereafter. We had another we decelerated, had a high velocity move made by sellers, and then took out the low of this with a level 2 selling aggression bar. So when that happened, that's a very important clue, because like I said, we like to look at what quote should happen and then what does happen. So what should happen, again 7 or 8 out of 10 times, is when we have a level 3 bar on the low of the day that doesn't have immediate follow through, that should be the low of the day. When that didn't happen, when that didn't transpire, that's giving us a very strong clue that an opposite reaction is likely. And you can see that was even exemplified, or what's the word I'm looking for? Accentuated, I guess, when not only was this low taken out, but it was done so on some pretty strong selling. So when that came in, at least short term, and our filter turned over at that time as well, at least short term, it's telling us sellers are very much in control of this market, again short term. So you wouldn't want to be fighting that by taking long trades. So that's kind of number one thing we like to focus on, is avoiding low expectancy or low edge trades. So if you're thinking about a long, you want to avoid that. And then number two, how do you get into more high probability trades? I'm not going to talk about different trade entries at this point, but kind of focus on the idea that any short trade at this time has what we call time on your side, or it's a little bit more high probability, high expectancy. Okay, so then you can see we tested into what we call our caution zone and bounced a few points, then took out the lows again on another level 2 selling aggression bar. This caution zone, which would normally be support, but when it formed, it's telling us there's a lot of weight on this market, so be careful, being a buyer, obviously. That turns over to red, resistance. This is kind of one of those nice confluence type trades where we've got a filter, we've got good structure, we've got a resistance zone, deceleration, what have you. So pretty nice trade entry location there, just from a simple what we call confluence type of a trade perspective. And then that continues on and gets even stronger with this level 3 selling bar that you can see had immediate follow through. So again, it's showing us that sellers are very much in control of this market, as they basically showed from up here, and you wouldn't want to fight that. We have an attempted response from buyers that's rejected right there very quickly, and it wasn't until this point right here where we got a level 2 buying aggression bar that had some follow through, followed by a level 3 buying aggression bar that had some follow through, that it's the first sign that this wave of pure selling is at least over. It doesn't mean bulls have taken over, but it means that this wave of pure selling has come to an end. It's more of what we call a two-sided market. Okay, so in other words, you want to be a little more nimble at this time. It's a little indecisive, and so when this came in, this is interesting information, because a level 3 buying aggression bar that happens near the low of a day as a responsive action is typically quite strong. Now that's in opposition to this very strong level 3 selling aggression bar. So when this came in, it doesn't mean necessarily that bulls have taken over. I guess in the short term it means that, but it doesn't mean that bigger picture they've taken over, but it does mean that we're more two-sided. There's still what we would call more, some seller-controlled territory in here that buyers would have to make up. And so when this formed, we were actually doing a member webinar today. When this formed, we talked about how from this area here through the low where some strong selling came in here to where some strong buying came in down here, this basically set up a conflict or a battle situation, and we wanted to monitor what would happen when these levels were tested. And you can see we kind of continue with some buying structure up until we tested these highs, and if the buyers were very strong there with this level 3 bar, we should have had some continuation. And again, we know level 3 bars are typically the beginning of a move or capitulation. Okay, out of gas, so to speak. You can see this one got rejected very quickly at an area that we expected to be resistance, both with this red resistance level and the fact that it's the high of this where some very strong selling came in. So again, that's indicative that we're likely to go test the lows. We did so, and we did so on some pretty strong selling aggression, and apparently some North Korean news may have come out at that time. Regardless, you can see that some buying did enter the market there, where at this time I would have expected us to probably close on lows, but there was a reaction here. Maybe it was on news, but you can see that that's illustrated by the software. There's some extreme buying aggression that came back in. So if you were short, you could at least get out of that trade. And you can see that we didn't quite take out this level either. So, going forward, and I wanted to, before I talk about going forward, let me bring up the 15-minute chart. This is kind of a chart I like to look at a little bit longer term. And you can see that, we've been kind of in an up auction, and every time we test a support zone, hold on one second. Every time we test a support zone, we've had a pretty good bounce, then we've had some selling to support, to support, to support with some buying, to support, we get some buying. But yesterday we hit the resistance, or in the overnight I should say, and today we pierced right through this support zone bigger picture on some pretty good selling and rejected our first responsive buying activity. So it was showing us again that sellers were in control a little bit longer term until we started to see more of a two-sided activity there on this. So that's a 15-minute chart. You can use the the 15 or even a longer time frame to give you a little bit. Again, this is Wednesday, Tuesday, Monday, to give you a little more perspective when you're doing your day trading, or you could actually do more of a swing trading type of a thing off of a 15 as well. But getting back again to the 1 minute and looking forward, I think that this 51-52 area here is pretty important. Let's monitor what happens in the overnight. Can we stay below that? Can we make new lows? If so, at least kind of shorter term, bigger picture bias, we'd have to say is kind of turning over to the downside. We would still want to monitor what the market can do around 1521. If we can get below that, then certainly sellers, we would say, would be pretty much fully in control of the market. So could be potentially a turning point in the market. We want to monitor what happens overnight. Certainly between around this 51-52 area. Can the market get above this? Can we make new lows overnight? Do we just stay in here and wait to see what happens in the morning? That's kind of going to be interesting to see overnight and the beginning of tomorrow. So hopefully that's helpful. Let us know if you have any questions about that. We'll be happy to answer them. Okay, talk to you soon. Thanks.